Hey everybody, it's Jack, and it's that time of the week again where I'll be updating you all on how my WealthSimple Small Account Challenge is doing, how the progression is going, and we've just finished week number 4, so it's officially been a month since I started the challenge, and it was a pretty crazy week overall with the stock market, so I'll get into that. I'll be covering all the changes and moves I made to the portfolio over this past week, as well as giving my overall thoughts on the market currently and what I plan to do over the next few weeks to overall my portfolio. Just quickly, for anyone who's new to the channel, I'm currently undergoing a WealthSimple Small Account Challenge, where my goal is to bring a $1,000 account up to a $100,000 account through saving like crazy and smart investing, really just chipping away at it week after week and trying to document my progress for you all to really just show that it's possible for any average person like you and me to generate wealth through simple and smart investing. So with that being said, let's jump right into the video and show you the progress on my account. So I just want to quickly touch on the overall stock market as a whole. We have just currently experienced our second straight week in the red. So our second straight week of the stock market going down overall. And this past week, we saw a drop in around 2.5% of the overall stock market, which is quite substantial. And for someone who started this challenge a month ago, it's obviously not ideal that we've seen the stock market decline ever since I started this challenge. So not ideal for me. But again, we're not trying to make $100,000 overnight. This is a long-term goal, and we're long-term investors. For a long-term investor, seeing the stock market decline can actually be quite beneficial in the long run. So keeping that in mind, you're going to be able to come out of this better off than you were before and actually use it to your advantage. So let's get into it. All right, so going right over to my overall account status, my WealthSimple small account currently stands at $1,772, which it finished the week very strong, with Friday being up almost 4% at 3.86%. But for the overall week, we were still down and down around 1.7%. So down 1.74% for the week. Not great, but honestly, if you think about it, the overall stock market, both the Canadian and US stock market, sold off and dropped around 2.5%. So if you look at it that way, we're actually coming out ahead of the overall market, which I guess will count as a win in my books. I know it's not ideal to be in the red, but overall the stock market dropped more than my overall account. So again, that's something to keep in mind. And now let's look at the actual holdings in my account. So I have now 11 stocks currently in my account. I think it was 7 or 8 last week. So we've only sold one position, which was Real Matters, ticker symbol REAL. This was a stock that I've been battling with over the last few weeks. It keeps shooting up, shooting down, and not really finding a steady common ground. I did notice that there was a pattern evolving with this stock. It kept going up to the $17.50 range and then shooting back down to $17, up, down. So I kind of just took my profit and sold around the top, around $17.40. And then it actually shot down and it's now around $16. So definitely fortunate enough for me. I got out of that one. And really, I just wanted to shift my overall focus towards dividend stocks, which you'll see. So that was kind of a win-win. I got a small win, but also got to shift my money over to dividend stocks so that if the market does continue to decline, at least we're getting paid from our stocks. So that's always a win. So the current stocks in my portfolio are Algonquin Power, AQN, Brookfields Renewable, which is a new one, BEPC, a renewable energy company. We have Enbridge still, Good Natured Products, and Green Lane Renewables, which were both on my watch list from last week. So you'll notice that a lot of the stocks on my watch list, I almost picked up all of them, as well as we still have our H2O Innovations and our Standard Lithium, our big long-term growth stocks. And then we also have our Smart Centers REIT, which pays us that monthly dividend, our TELUS stock, ticker symbol T, and then we picked up 2 ETFs this week. So we picked up the Vanguard High Canadian Dividend Yield ETF, which is VDY. This one pays out a monthly dividend of around 4%, which is great. And then there's VFV, which is an overall ETF that tracks the US stock market, the S&P 500, and it offers also a 1% dividend. So you're getting a really small dividend, but it's just giving us overall diversity to the US stock market. So those are the 11 stocks I currently hold inside my portfolio. Moving forward, these are really stocks that I'm going to try to just continue adding position sizes to. I don't see myself selling any of these for the long term. These are all stocks that I have a really high conviction in, and I think long term are all going to be winners. So going into the stocks I bought and the positions I added to my overall portfolio this past week, we have Algonquin Power, which I had last week, but I've been adding to. I've doubled my position size from 6 shares to 12. This is a stock that saw a pretty rough week overall. It came out on Monday that one of their wind farms down in Texas had some damages, as well as not being able to be operational because of the severe storms they're seeing right now. So this stock went from $22 range to now down to $19.71. So around a 10% drop. The damages from the wind farm are estimated to be around $50 million, which would be a cash hit for them that would equal to a 5 to 6% hit of their revenue from last year. So we can see that that's kind of scaring investors, but the stock price has decreased 10%. So I think really this company is overselling right now because of this news and is actually at a good value. So I did have 6 shares last week, and then unfortunately it's been seeing a big decrease this week, but I've just been adding shares as it continues to go down to bring my overall cost basis down. We're dollar cost averaging this long-term investment that pays a nice dividend for years to come. So again, as you see the market sell off, it opens buying opportunities to bring down your cost basis, and really in the long term, that's going to benefit you greatly. We also picked up 1 share of Brookfield Renewable. I did feature this in one of my previous videos of dividend stocks to buy right now. This is one that's in the renewable energy sector, a sector that I see just growing over the next 10 to 20 years constantly. We were able to see that this share price has decreased substantially over the past month, going from $72 down to, I got it just under $57. So this is one that could also see extreme growth in the short term. If it's able to get back to that $72 range, you're going to see around a 50% increase in the share price. But for the long term, 10 to 20 years down the line, I think this company is just going to continue to grow and grow and grow. They're diversified into wind energy, solar energy, and hydro energy. So they have a great portfolio, and that I showed in the previous video, over multiple continents. So they're really diversified in every aspect. I also added 2 growth stocks that I had on my watch list last week, being Good Natured Products, GDNP, and Green Lane Renewables, GRN. I only started kind of like starter position sizes in both of these, getting 15 shares of each, so like not a lot of money. But I just wanted to see overall how the stock market is going to do over the next week or two. You know, if we are in a correction right now and we see the stock market drop another 5% or so, I don't want to be stuck holding hundreds of shares of both of these and then seeing it go down when I could have bought at a much lower price. So I'm kind of just hedging the bets here of whether the stock market is going to go up now or down by just getting a starter position. And then hopefully if the stock market does go down and we see even better prices for these, I'll buy in even more. So the other 2 stocks I added are actually ETFs. So I've added 2 ETFs to the portfolio. Again, they were on my watch list last week. So I bought VDY, which is Vanguard High Yield Canadian Dividend ETF. So if you recall from last week, I actually had 3 ETFs on my watch list, but I've only bought 2 of them. I also had the Canadian Banks ETF. I had ZWB. But what I actually did, once I did more detail and research into VDY, I saw that the breakdown of VDY, if we go over it, it's around 50% the Canadian banks. So VDY offers a just over 4% dividend yield. This was a great way. I already wanted to get exposure to the Canadian banks, and doing my research into VDY showed that it's got a big buildup or breakdown of its assets is in the Canadian banks. So that's exactly what I wanted. So I ended up cutting the other Canadian banks ETFs and going with VDY because it has more exposure to other stocks, but also a heavy weighting into the Canadian banks, which is what I wanted. So this might not be one for you, but it offers just over 4% dividend. It pays out monthly. And then the final ETF is just the one that tracks the S&P 500, so the US market overall, and it's called VFV. It pays a 1% dividend, but it's not really for the dividend. It's just kind of to give exposure to the US markets and just overall diversify even more with a more stable stock. It just gives overall steady growth to the account because the overall US market on an annual basis grows around that 7 to 10% range. So this is a stock that will just give a nice little 1% bonus dividend, and then it'll also hopefully grow at that 5, 7, 10% rate year after year. So there you go. Those are all the new stocks I've bought or positions I've added to in size over the last week. So now let's jump back over to my Excel spreadsheet and see how my dividend tracking is going, as well as my overall portfolio breakdown by percentage. So here's my Excel spreadsheet that I use to track my overall portfolio breakdown as well as the dividends I'll be earning. So we can see I've updated it so that there's now the 12 shares of AQN, as well as updated shares of H2O and Standard Lithium, and my new positions are now also in the spreadsheet. You'll notice that I've left out my 2 small starter positions in Good Natured Products and Green Lane Renewables, just because the overall weight they take up right now in the portfolio is around like 1 or 2% overall combined. So for just ease of simplicity and keeping them out of the chart for now, I just have not included them, but if I grow that size of position in either of them, I'll add them to the list. Another thing to note is that a lot of you guys have been asking for me to share this spreadsheet. I am working on it. I'm just a perfectionist and I've been super busy. So I really just want to make sure it's as easy to use as possible for when I share it out. So I am planning to do that sometime soon. So just be patient with me. I will get this to you guys so that you guys can also track your dividends and portfolio breakdown in this simple and easy way. So I will get that to you, I promise. So if we jump right into our overall dividend tracking over here on the left, we have our dividend tracking, and we can see that right now I'm keeping track of the annual dividends. So just adding up all these columns over here. And our current annual dividends is $36. So we're making right now some $36 in passive income every year off of our current holdings. And our monthly average is now at $3.02. And I've just added the previous week's values here so that you can see on a weekly basis how we're actually improving our overall passive income and dividend earnings. So we can see that just over the last week, adding a few more positions into these ETFs and Brookfield Renewables, as well as Algonquin Power, has jumped up our annual dividend over $10 or around $10. So we're now earning $10 extra a year, and our monthly average income off of our dividends has gone up around 80 cents. So 80 cents every month in our pocket because of these dividend stocks we've added to our portfolio. And I really just want to stress that the way this works is if we continue this week after week for years, you're going to see that this will add up. So it's not that hard. We're only adding maybe $100 a week in dividend stocks. We're buying 3-4 shares of certain dividends. And now we're getting this up and up and up. So you can see in a week, I've almost added $1 every month to my income. That could be, going out and buying a coffee, in retirement. We're now getting extra coffee every week because of these dividends. So you're going to see that if we do this every week and you're doing this on a consistent basis, it's really just about consistency. If you can do this every week for, 20 years, at the end of this, you're going to have thousands of dollars every month that you're getting based off of your dividends. So you can see if you just chip away at it, it's going to add up. And that's really what I'm hoping to show you guys is that every week I want to see this value increase. And then hopefully we're going to start hitting milestones, of that $5, $10, eventually $100 that we're earning every month off of these dividends. So it's pretty friggin' sweet. So now if we jump over to the portfolio breakdown, so we can see right now, Standard Lithium and H2O are still my biggest positions by quite a lot. They make up 25 and 26%. So 50% of the overall account is in these two high growth stocks that I keep adding to every week. I add a couple shares every week, bringing down my overall cost basis because they have been dropping a little bit with the overall market. And you'll see that I'm trying to decrease the overall size of my account that they take up. Last week, they took up around 60% of the overall account, but now we're down to just over 50%, being at 51%. So that's good. I'm trying to de-risk the account, add in more dividends so that the weightings equal themselves out. And you can see that AQN is now at 15%. It's the third biggest holding I have. And you can see that my ETFs make up about 10% of my holdings, which is cool. The overall long-term goal for my account breakdown in percentage-wise, I want to get around 20 to 30% in ETFs. The majority of this being probably in VDY or potentially if I add further dividend ETFs to the overall account, get those up to around 10 to 15%, and then have around 5 to 10% in VFV, an overall US S&P 500 ETF that hopefully will consistently grow over the years. So we're currently at around 40% in dividend stocks, which is good. I want to get this number up to around 50% of the account. So I want around 50 to 60% of the account to be in dividend stocks so that we're earning passive income from these for a lifetime down the road. And then I want that 20% in the ETFs. And then I want around 20 to 30% into my growth stocks. The overall goal is to bring down these growth stock percentages over time so that the ETFs take up more and the dividend stocks take up more, and that these are just around 20 to 30% stake in my overall account. So really you're going to be earning passive income from your account, and then you're hopefully just getting some good gains off your growth stocks to help boost the account overall in value. So I'd love to know what your overall breakdown of your account looks like. What percentage do you allocate to growth stocks versus dividend stocks? So let me know down below in the comments what your overall breakdown of your account is, or what your overall goal breakdown is, and split between your growth and dividend stocks. I'd love to know what yours is. And now if we go to this week's watch list, we can see that for growth stocks, we still have Good Natured Products and Greenlane Renewables on there because I just want to see how the market goes, like I said. And if these stocks dip more, I will add to these position sizes. So they are still on my watch list to add to. And then for dividends, I want to beef up my TELUS position, just bring that up to around the same as AQN, around $200 or so in TELUS. So add 1 or 2 more shares. And then I also want to just get in the habit of adding this VDY and adding 1 share of VDY per week or two on a consistent basis to just help diversify the account even more. And then, like I said earlier, I also want to add 1 more share or 2 if BEPC drops even further, because I do think this is an amazing dividend stock for 10 to 20 years down the road. And then another stock I featured in one of my previous videos is TransAlta Renewables. It's also seen a pretty big hit over the last week or two in share price. And this is a stock that pays a monthly dividend in the renewable energy space. So you can see I'm big on the renewable energy space, and this one's a good one to add because it offers that monthly dividend. So you can keep that monthly dividend cash flow coming up and up and up. And again, I'm just going to keep trying to add to this annual dividends and monthly average. Eventually, at one point, be able to hopefully retire off of these in the long run once we get to that 100,000 plus range. I know it's going to take a lot more than $100,000 to retire off dividends, but that's the long-term goal. So that's it. There you have it. There's the week 4 update. That's where my account stands. I hope you guys enjoyed this video. And if you did, please smash that like button, subscribe to the channel to stay up to date with all my content and how my challenge goes week after week. I'll see you in the next one. I appreciate it.